Hello, guys, and welcome to the show. Listen, can't begin to tell you how much trouble we're in. Honest to goodness. Let's get this chart started. Okay, hold on. Getting them started right here. And let's take a look at what's going on here. First thing we're going to take a look at is the Exchange Stabilization Fund, you know. This is something that they set up quite a long time ago. It says... the increased turmoil in the international financial markets started with the Asian crisis in 1997. This led to calls for financial assistance from the wealthier nations. In December of 1997, the United States announced a $5 billion commitment toward the international package of financial assistance for South Korea. And so what we see is the Exchange Stabilization Fund active here in a number of situations. And first off, they do have a balance sheet, the Exchange Stabilization Fund. Now, this Exchange Stabilization Fund is part of the Working Group on Financial Markets, okay? And this also includes the Plunge Protection Team. And it was created by an Executive Order 12-631, signed on March 18th, 1988 by United States President Ronald Reagan. So the Plunge Protection Team has been working since March 18th, 1988, and it has three purposes and functions. Recognizing the goals of enhancing integrity, efficiency, and orderliness and competitiveness of our nation's financial markets, and maintaining investor confidence. See right here? Maintaining investor confidence. Now the thing is that they don't really have anybody to answer to besides themselves. They can do practically what they want in appropriating money, and I've done some digging in to try to find out. Remember yesterday I said that I was going to do some digging to try to find out where their balance sheet comes from? Well, it seems like their balance sheet is actually part of these dark money pools. You know, there's unreportedly $21 trillion in these dark money pools out there that they can tap into. And I don't think I'm going to be able to find out exactly where their balance sheet is or where they're getting this money. I might as well give up on it. Let's just call it dark pool money. They're hauling this money. This is dark money they're hauling in from gosh knows where they're getting it. But it's the Exchange Stabilization Fund is part of the Working Group on Financial Markets. And there's been a lot of articles written about this. Like this article right here. It says, is there an unseen hand in the markets? You know? It says, with the Federal Reserve raising interest rates and unwinding its quantitative easing balance sheet, Russia selling half of its U.S. Treasury holdings in the month of April, and a variety of other nations making agreements to circumvent the dollar. It says the Treasury yields have fell. It says, however, what becomes more difficult to ignore is to the degree to which there's a lot of manipulation in today's markets and dark money pools that are often not publicly accounted for, and rumored to be somewhat regularly distorting the proppings of the markets. So the Exchange Stabilization Fund is at the center of all this, and they control the Plunge Protection Team, and the Plunge Protection Team fully has it within their mandate to come in and rescue the markets. Now, let's take a look here a little bit closer at the news for this week. And this is a first for me, because for what I've never seen anything like it. Top Trump officials calls bankers and will convene the Plunge Protection Team. So what they basically say in this article is, and this is open, this is this week's news. This news was off of December 24th, just like 2 days ago. They told you that they were going to do it. They told you that they were convening the Plunge Protection Team, and they got in touch with the biggest bankers, right? The Treasury said in a statement that the Treasury Secretary, I have a trouble pronouncing his last name, with the chief executives of the Bank of America, Citigroup, Goldman Sachs, J.P. Morgan Chase, Morgan Stanley, and Wells Fargo all sat down together, and they said that they have ample liquidity ready for lending. Now, that was a couple days before the market went up. Okay, that was like on the 24th. Now it's the 27th. We've had 2 days of what? Let's take a look here. Let's take a close look at the market. And we can see what was happening here with the market. The market was in a fall. It was falling and falling here. It fell down to this bottom right here of around 21,007, more or less, right? This is when on the 26th at around 10:59 or 10:55, right around in that time, just before 11 o'clock, actually 11 o'clock sharp. At 11 o'clock sharp, this is when your plunge protection team came into the rescue. Right there, right? And they went out to lunch at about, after they did quite a little bit of running the market up, they went out to lunch. I could just see them going out to lunch at, 14 minutes later? Well, they started at 11 o'clock, and at 12:58, or roughly, or no, right around here, just after 12 o'clock noon. That's when they went out to lunch, for crying out loud. Look at what happened. The market started to fall right here. Just as soon as they go out to lunch, they just go out for a couple minutes, and the market starts to fall. Okay? So they come back to from lunch, and they pump it up. They pump it until 4 o'clock in the afternoon, and then they quit, right? Then they come back the next day, and they want to see what's going to happen with the market. Okay, so they say, okay, we've primed this market. We've done everything we can do to make this market go up. We ran it up over 1,000 points yesterday. We put all that money in. We poured tons of money in. Let's see what the market does. So they sat down and they watched that morning. And they watched the market. And it jigged up and it jigged down for a little bit until it hit a point right here. And they probably said, gee, you know, the market's not doing too bad. At 11:33 in the morning, they said, gee, the market's not doing too bad. The plunge protection team was sitting back and saying, gee, our intervention worked. Look, the market's floating along pretty good up here, right up to this point, you know? And then what happened? She started to fall back down again. And she fell all the way back down to 22,276, and the plunge protection team says, oh no. At 2:20 p.m., they said, oh no, we got to step in, we got to intervene again. And that's what they did today. They stepped in and they intervened again today. And you see what's happened? They've pushed that market all the way up to 23,109. This is all plunge protection. There's no other buyers out there. They're buying the whole market. The only other people out there are people who just can't wait to sell. They're trying to sell the rally. And so every time that the plunge protection team backs off the pedal now, the market falls. So they've been in there for 2 days. They told you they were going to be there. They've been in there for 2 days trying to support this market. And you can tell it's them. I'll show you why. If you go down here and take a look at the bottom of this chart here, and you see the ends of the day, you know, or toward the ends of the day, you notice the volume increases. Take a look at these last 2 days in the end of the volume, just at the very end of the volume here. I don't know. Let me get the chart in close so you can see this really good. I'll bring the chart in as close as I can. If we look at these volumes, these volume lines, let's take a look real quick. I'll bring this chart in as close as I can so you can see this. See, this is a typical end in here, or typical rate spike in volume. And what you actually see, you see red bars and green bars, red bars and green bars, red bars and green bars. That's normal, right? But look at the end of these last 2 days when the plunge protection team was in there. All green bars at the end there. Look at it. Every one of those bars is all green. And the same today. Every one of those bars is all green toward the end there, right at the end of the day. You notice they're buying all bids. It's like, I remember when I was a kid, I used to go to auto auction, you know, where they used to auto auction cars that had been smashed or whatever. And the thing is there was a guy that used to come in there, and all the other guys. This is funny. Okay, I'll tell you this little story. There used to be this bus. They had this bus there. The place was called Sadisco. It was down in Florida, you know. And they used to have this bus. And I was a kid. I liked to go with my dad to the auto auction. And they'd ride around the bus, around the yard. And they had all these cars there that had been smashed, you know. And my dad liked to buy these smashed cars and fix them back up again. So I was a kid, I'd ride around on the bus. And they had the whole side of the bus cut away. And bleacher seats in there. And down at the base of the bleacher seats, they had coolers with all kinds of different kinds of pop and beer and hot dogs, and they had donuts and everything. And I used to like to go with my dad and have a feed on that stuff, you know, and ride around in the bus, you know, while all these guys used to bid on these cars. My dad used to bid on them too, you know, but there was this guy come in there. He was there for a couple months, you know, and he used to come in the auction. He used to buy everything. He would just, didn't matter the price, he'd bid everybody out, you know. He was like, the car he was going to bid on, nobody had even bid against him, because he's just like, he'd bid $100 more every time than what their bottom bid was. And he just bid it right up until they'd drop out, and then they'd give the car to him. And it's like he had endless money, you know. And so one day we heard in the newspapers that that guy was what he was doing, he was stealing cars, and he was going around buying these junkers that would match the same model and year. And he would take he would take the sticker or whatever and put it on from the junk car and put it on and raise a title for the car he stole. He was working a car thief ring, you know, and that's what was going on. That's why he had unlimited money to bid against. These other guys were legit, but this guy was not legit, you know. And this is kind of what this reminds me of. The whole thing is just like, it's not legit. It's not legitimate buyers coming in here and actually buying the market. The legitimate buyers right now, they just want to dump on the highs. As soon as the plunge protection team drives it up to a certain point, they're nice and high and fat, they come in and they decide to sell, you know, and they're trying to sell. So everybody's trying to sell. There's no buyers in this market right now. So we're in a lot of trouble, guys. We're in a lot of trouble because everything now is in the hands of the plunge protection team, basically. Our market is in their hands. If they decide that, hey, you know what, guys, if they say to one another, they sit around the table and say, you know what, guys, we've worked 2 days at this now. We've went through, I don't know how much, couple $100 billion or whatever, you know, we're supporting these markets, and they decide just to pull the plug come New Year's. I mean, these markets are just going to roll over something vicious if they decide to pull the plug on what they're doing. And I would almost say with certainty, I mean, I'm going to give it odds. I mean, I can't prove that this is the plunge protection team doing this. Nobody can prove it. But it looks awful suspicious to me, the fact that they came in a couple days ago, you know, and they said, hey, you know what? We are convening the plunge protection team. Okay? That's what they say to us. Like on the they said it on the 24th. They said we're convening the plunge protection team. And then as soon as the markets opened up and the markets started to fall, whammo! What happened? Right here. I can show you right here. This is where they come in. Man, it looks suspicious to me that it's the plunge protection team doing this. And especially at these ends of the day, you know, with absolutely no red candles mixed in with the volumes here. I mean, this is just looks very suspicious to me. Anyway, listen. Thank you guys for listening. Oh, one more thing I wanted to talk about Deutsche Bank, you know. We had a fall of 4.15% today alone on Deutsche Bank. Deutsche Bank is at 6.75 euros. I've predicted that, okay, let's take a look at the 5-day chart. I've predicted, that Deutsche Bank, if they drop below 6, that they're going to start declining really fast after that, and we're going to hit a Lehman moment. Now, I haven't heard any more news about this merger between Deutsche Bank and Commerzbank. Nothing. There's nothing in the news. If you guys hear anything about it, if the Germans are still planning on merging these banks, let me know in the comments section. This is very important, Deutsche Bank. It just, an awful lot of things are pointing toward this next year, the first quarter of next year, being unimaginably crazy. Deutsche Bank could very well go down in the first quarter of next year. We're looking at the Brexit on the 29th of March. Looks like a hard Brexit. We're looking at this movement in France that hasn't went away. It's just that the people have went home to celebrate Christmas right now. That's all. Right? Called the Yellow Vest movement. It's threatening to spread all through Europe. We've got the Italian situation in the Italian banks. China's GDP is going to come in, and I'm going to tell you, it's going to be off. I mean, even if they fudge the numbers, it's going to be off. The Chinese real estate market's ready to start to collapse. We got a lot of problems that are seemingly going to come to a head all in this new year. This might be the year from hell. Quite seriously. 2019 might be the year from hell. At the same time, they've already showed us what they're going to do in the gold and silver markets. You've been watching the gold and silver markets carefully. You notice a little uptick when the investors start to get scared. Same thing happened back when they thought for absolutely certain that Britain was going to vote to stay in the European Union. All the bookies, I should say, were making bets that they were going to stay in the European Union. And then all of a sudden, powie, they voted to leave the European Union. I was watching silver that night, and it was roaring up like a skyrocket. It was just going up like, I've never seen anything like it, I can't remember exactly how it made. I know it went over $20, when I was watching it that night. And I was like, wow, And you see what they're going to do. They're giving you pointers toward what's going to happen when all of it comes crashing down. And I've said this, going back quite a ways now, I've said what I think is going to happen is that they're going to run to 3 asset classes, the dollar, gold, and silver. Now, the 4th asset class, it's not really an asset class yet, which is cryptocurrencies. They could very well dump them. That's a possibility. Or they could run to them. It all depends on how sentiment is at that particular moment when the crisis actually comes. So if we go into a crisis early next year, how they will respond to cryptocurrencies is a little bit of an unknown. Because an awful lot of it depends on which way cryptocurrencies is moving when the crisis hits. If cryptocurrencies has hit bottom yet. So if cryptocurrencies goes down now, then more than likely, if it goes down really low now, really low, right, in price, then more than likely we're going to see a boom in cryptocurrencies when the crisis hits. They'll go up. But if cryptocurrency stays up, then when the crisis hits, we could very well see them fall off. If that's making any sense to you. Because it has a lot to do with sentiment. Cryptocurrencies can get it over with and get all of the weak hands flushed out and get down on a really low price, and then the crisis hits and it starts to move upwards and it's in an upswing trend, then piles of money could pour into it. Because money's going to be when this crisis hits, I'm going to tell you, money's going to start moving around. Liquidity's going to start moving around in the system almost like a loose cannonball on the deck of a ship, that's in a hurricane. That money's going to be moving around. Okay? And when that crisis hits, it depends on which way the money's going, which way it's already flowing. If it's starting to flow into Bitcoin and the cryptocurrencies, then it might continue. And the more it flows into that area, the more it's going to draw and attract in more people. See what I mean? Now, if it's moving in the opposite direction, if it stays up now, it's more than likely going to be moving in the opposite direction from that, which would be down even lower. And if a crisis hits and they decide to pile out, well, I mean, we could take cryptocurrencies down really low. But I'm going to tell you what, that would be a great opportunity to buy in if that does happen. So you got to keep your eye on these markets. Anyway, listen, thank you guys for listening, like, and subscribe. We'll catch you in the next show. Bye-bye, guys.